Today, I'd like to review our narrative that we've been going with, which is that the dollar is going to be strong, inflation, higher bond yields, okay, lower prices, and that the euro has some issues, which it still does, and then the yen could be moving up. And so we've had a change in the narrative, I would say, and it's because of one of the threatened tariffs by Trump, and then today he came out and said 25% onto the EU, and so we've seen I don't know if it's a major switch because it's still, kind of in the range, but this is what's going on. The first thing here is our bonds, the 10-year bond. And I think it's fascinating that, we did a video. I'll pin it. I have nothing pinned right now. Bassett saying that we're going to be concentrating on the 10-year. And almost since that day that he said that, we've gone from basically 480 down to 425, 55 basis points, which is a huge move in bond. Now, we came from 360 all the way up to 480. Now we're down to 425. So I would say market sentiment at this moment is more afraid of the economy slowing down, though we don't have any indication of that. We have consumer confidence is down, but economically we have not seen that. And in fact is today, the CEO of Bank of America came out and said Bank of America does not see any cuts for this year and next year, okay? So I don't know where it's going, but I would say that the narrative in the marketplace is now turned over. And the other thing that's going on is this stuff with the yen. Now, we hit about 157. We thought it was going to go about 170. But literally from almost the day that Bassett said that we're going to concentrate on the 10-year and that they don't mind if the Japanese raise their rates, the yen has been going up. So remember, when it goes down, it's actually going up. So we've gone from 157 to, as you can see here, I think it's 148.84 right now. It went down again when Trump announced the tariffs. Because remember what we said about currencies. Currencies are driven by economics, okay? Yes, we do try to stop something from happening or force something to happen through interest rates, either up or down, but basically the market, investors, big asset managers are looking at what is the economic growth rate. So obviously, the narrative for the U.S. is that with all these tariffs we're putting on, we're going to slow down. Plus, you have whatever they want to call this Doge thing where they're laying off. They say it's going to be 1.5 million people. So, I mean, I don't know how this helps the economy, but obviously that is something that could slow us down. And then, it seems that things kind of dovetail. You don't expect them to, but they actually do. And so Buffett says that, in 2019, they went in and bought the trading houses. And they spent a little over $13 billion for these trading houses. And now they're trading around $23 billion. And Buffett was very clear. He said the trading houses are in multiple different industries. Remember, they do that keiretsu thing over in Japan where they all work with each other and so forth. So he's saying that they remind him, the trading houses, of Berkshire because they have multiple industries that they're involved with. So it kind of gives them protection against, let's say, one thing happening to one company. So Berkshire is still accumulating more and more and more of the trading houses in Japan. So we're starting to see the effects, okay? Now they're saying United States economics are, let's say, muddied at this time. Again, it all depends on what we actually do, okay? Second, that Japan is had 3 quarters in a row of growth. They're growing around a 2.8% clip. Their inflation rate's 3.4, and even though their bonds are around 135, 136 today, people believe they're going to be 2% by the end of the year. So the yen is a buy. Okay, that's what people are doing. They're buying the yen. That's why it's going down, which is up. And secondly, now we have this secondary narrative coming in where Buffett's like, hey, these companies are cheap over in Japan. Remember something, people have not been buying Japan for a long, long, long time. And now maybe is the time because they're now coming out of this suppression of interest rates that went on for over 20 years. So, what are we looking for? We're looking for the yen to continue to move up. The only thing we're keeping our eye on, we had the yen carry trade break that one day when it hit 144.40 or 148.84, okay? So 144.40, so let's keep our eyes on that data point if this is going to continue. The second thing you're going to watch in Japan is what does their 10-year do, the JGB. There's a JGB, it went up to about just under 150, now it's 136, but I would say they're going to raise their rates and it's going to be about 2% by the end of the year. Where's the yen going to go then, all right? So you have two things going on. Now the third thing is the euro. Now, I know everything's over there. We don't know what's going to happen. There's multiple scenarios that could happen. But I would say the biggest thing that I've noticed, I follow this geopolitical person, Valina Takarova. I'll say Valina, all right? And she gives her 3 scenarios here, and you can read them. There's nothing special here, but she's a geopolitical analyst, where we're interested in investing. And I'll just say, notice she doesn't talk about what's going to happen with the euro, what's going to happen with the EU. Think about it. The EU is a regulatory and a trade organization. In other words, when you're trading with Europe, you go through the EU. They set the rules. And the euro, of course, is by 20 of them, 20 countries. So the question is if one of these scenarios comes down and people disagree. So, quick example, the Europeans say we're going to support the Ukraine. And Hungary says, no, we're not going to do it. Spain, by the way, says, forget America. Let's go cut a free trade deal with China. So that's coming out of Spain. Now, we've done a video before saying that Spain is having a $1 billion plant built by the Chinese in Spain. Does that influence them? Well, you have to make up your own mind on that. Also, you had Merz just get elected, and he was pretty clear that he felt that the Americans are no longer our friends. He also made a statement, which I agree with. He thinks that NATO is over. Because remember, NATO stands for North Atlantic, which includes Canada and America, and it also includes Turkey on the other side. So I think that organization has run its course, and a new organization will be coming out of this. What is it going to be? Here's 3 scenarios. You make up your mind, but it's not the scenario. It's who's going to participate, and if they don't participate, will they still be in the euro? Will they still be in the EU? And that will be the question that's going to tell us, because if the euro breaks, then you have 2 places you can go. You can go to America or you can go to Japan. And you could see the Japanese yen be a huge buy. What do you think? Like and follow, and certainly tell me in the comments.